Good evening, investor. We are about to start. In the meantime, leave any questions that you have about how to navigate the app in the comments section, and we will be happy to address your questions in the course of this training. My name is Gertrude Hanjeri, and our financial markets analyst, Anthony Kiambati, will be taking us through how you can navigate the Hisa app.
Hello guys, I think we can start now. So just as Gertrude has said, I remember to leave your questions on the Q&A segment. So should be a quick one, just going through the general layout of the app and basically explaining the different aspects basically. So let me start. Hope everyone can hear me. So let's start on the left side, the far left side of the app. That's the community section. So when you click on the community section, so this is where you find basically the discussions that other investors are having. So basically what investors are talking about. And this is where you go to basically get ideas of basically what's happening in the market, the shares that people are buying, and basically to get some updated news about the market. So if you have anything, if you have anything to say about the market, you can just click on the community section and just start a discussion. So you can just start a discussion like, hello guys, let's say I like the VO ETF, etc, etc, and then after that you can post, right? And then your post will be able to get some comments. At the same time, if you find someone has posted something and you'd like to comment, so you just click on comment, and then you can just comment and add some comments. Or at the same time, you can also like a specific comment by any user, right? So that's it about the community section. Then we have the podcast. On the podcast, you'll basically be able to access a few podcasts that are educational, that can help you navigate the markets. So you can click on any of the podcasts available. And then let's go to the main button, which is the invest button. So the invest button, this is where you go to basically buy your shares, buy and sell your shares. So let me explain each segment. So the first segment here, the upper part, if you guys can check the upper part. So the upper part is where you're able to see your portfolio. So when you click on the upper part, I think that should be purple or something. I think purple or blue, I don't know. Anyway, when you click on that part, you'll be able to see the instruments and the assets, basically all the investments that you hold. When you click on that part, that's basically where you click to see your portfolio. On the other hand, you can click on assets and you'll be able to see a breakdown of the various assets that you have, right? So let me go back. So you can click here and you'll be able to see the instruments that you have, and you can go through a deeper breakdown where you get to see the assets that you have. Okay, on the other hand, let's go to these buttons, the 4 buttons. So for someone who wants to buy Kenyan stocks, you'll just click on Kenyan stocks, just click on Kenyan stocks. When you click on Kenyan stocks, you'll find the stocks categorized into several categories. So we have the likes of all stocks, the penny stocks, the dividend stocks, the value stocks, the growth stocks, etc, etc. So if you have an idea of what you're looking for, you'll just click on all stocks. And when you click on all stocks, you just search any stock that you want. So let me search, let's say Safaricom. So you can just type Escom. So you can search by the name of the company, or you can search using the ticker symbol. So the ticker symbol is basically a combination of letters used to represent a company, so or a specific stock. So for Safaricom, its ticker symbol is Escom. So you can type Escom or you can type Safaricom. So click on Safaricom. Okay, when you click on Safaricom, you're able to see basically the price at the top. At the same time, you're able to see the company info, basically everything you need to know about Safaricom. And then let me go back. So Kenyan stocks, all stocks. So you can be able to search any stock that you want. So we have this all the companies listed in the NSE, so you can buy any. Okay, let me go back. Let's say you want a specific category, so we have classified the stocks into specific categories. So we have what you call penny stocks. So penny stocks ideally are stocks that are trading below, let's say like 1 bob. So they're trading at around 0.18 cents, that's Uchumi, 0.30 cents, that's Home Africa. So basically trading below 1 bob or at least at let's say 2 bob. Yeah. So basically they're the cheapest stocks in the market. So let's say if you don't have a lot of money to invest, you can start investing in this category of stocks that you call penny stocks. So in the US, a penny stock is a stock trading below $5. In the past, it used to be $1, but they increased the limit to $5. So in the US, any stock trading below $5 is called a penny stock. In Kenya, there's no like an official classification of penny stocks, but ideally we usually say any stock trading at let's say below 1 bob or even below 2 bob, we consider it a penny stock, right? So those are penny stocks. Then we have what you call dividend stocks. These are some stocks that have been paying dividends consistently. So you see the likes of Standard Chartered, which has quite a high dividend yield of around 15%. You see the likes of BAT and the banks. Of course, the Kenyan banks have some of the highest dividend yield in the NSC. So if you're a dividend investor, you'll not go to all stocks, you'll go to the dividend stocks. Then if you're a value investor, you'll click on value stocks. If you're a growth investor, you'll click on growth stocks. Right? So value stocks are basically stocks that are considered undervalued compared to the general market. And then growth stocks are stocks that are considered to be growing at a higher rate than the average market. So for growth investor, they'll go for the growth stocks. For value investor, they'll go for value stocks. Okay. When you scroll down, you'll be able to see the movers. So these are some of the most traded stocks on that trading day. So we had the likes of Safaricom, Cooperative, Standard Chartered, BAT, and Limuruti. You can also see the gainers and you can see the losers. So you can click on the gainers and you can also click on the losers, right? Okay, let's say you're a beginner investor who doesn't have an idea. Let's say you just opened a Hisa account and you're like, okay, I don't know which Kenyan stocks I should buy. So what you do, after clicking on Kenyan stocks, instead of clicking on all stocks, you'd scroll down and then click on the most traded on Hisa. So when you click on the most traded on Hisa, you'll be able to see some of the stocks that most people are trading on Hisa. And then you'll have like a short list of some of the common stocks on Hisa. And then you can also go back and do your own research. So you can see most guys on Hisa are buying Safaricom, maybe because it has gotten quite cheap compared to maybe guys who bought earlier. So it's quite cheap for most guys. So Safcom, KPLC, Home Africa and East Africa, and Home Africa, East African Cables, and CIC are some of the favorites because, as we said earlier, they're penny stocks. So guys can buy a lot of shares with just a little amount. Then you have the likes of KPLC, you have the likes of Cooperative Bank, you have the likes of Tree and Absa, Everready. So you can just do a quick narrow down of these stocks and do your own research. Why guys buying these specific stocks, right? Okay, so let's go back. Then you can also see the stocks by sector. So you can see the various sectors that we have. So in the Kenyan market, we have 11 sectors. So you can see the various sectors there. And then when you scroll down, you can also see the various indices that we have. So we have the NSE 20 share index, which tracks the 20 blue chip companies in the NSE. Then we have NSE 25, which tracks 25 companies in the NSE. Then we have the NSE all share index. So you can be able to see the performance of the general market. So let's go back and let's go to the US stock. US stocks. Okay. So when you click on US stocks, it's the same layout. So basically, we have all stocks, we have growth stocks, we have value stocks, we have dividend stocks, we have Buffett favorites, we have blue chip stocks, we have large cap stocks, many options. So for US stocks, the options are quite many because also the stocks are quite a lot. So for US stocks, the same process. So if you want to buy a specific stock, you'd click on all stocks, then type the name of the stock you want to buy. So you type either the ticker symbol or you type the name of the company. So for this, one of my favorite companies would be Apple. So just type either Apple or type by ticker symbol. So I think Apple's ticker symbol is the double APL. So when you click on double APL, you'll be able to get Apple. Yeah, so that's Apple. So click on Apple. And then you can choose to buy the share, right? So for the Kenyan stocks, I didn't show you how to buy. So for the Apple, I think we'll try to see how you can buy. So click on buy. So the moment you click on buy, this is a screen that you get on your phone. So I want to explain the various parts of this screen and what they mean. So we have the first point written order type. What's order type? Order type, there are three types of order types. You have what you call a market rate, you have what you call a buy stop, and you have what you call a buy limit. Okay, so a market rate basically means if Apple is currently trading at around 174.20 USD, you're going to buy the stock at that price. That's the market price, right? Then we have the buy stop and the buy limit. What do they mean? So I'll start with the buy limit. Buy limit means you want to buy this stock at a lower price than the current market price. On the other hand, a buy stop means you want to buy this stock at a higher price than the current market price. So why would you use a buy limit and why would you use a buy stop? So you'd use a buy limit, especially for investors who want to wait for the stock to reach a cheaper price. Let's say a stock like Safaricom. If Safaricom is currently trading at 15 bob, you'd say, let me put a buy limit at around 12 bob. I want to buy this stock at 12 bob. So you'd use a buy limit order. So you just click on buy limit and then select the specific price, right? On the other hand, when would someone use a buy stop? So a buy stop is commonly used by investors who use technical analysis. These are basically investors who are looking at charts. And when looking at charts, there are some patterns which we call maybe, let's say, an ascending pattern, a descending pattern, etc, etc. So for technical analysts, they'll look for certain pattern and they're like, if this stock is able to break out past a certain level, then the stock will have proven to me that it has enough buying momentum. I think there was a time for the guys in our WhatsApp group, I sent a chart of Apple and I was like, looking at Apple, if Apple manages to break beyond this zone, then we can see some more buying momentum. So for the buy stop, most of the guys who use a buy stop are the traders because they'll be like watching a specific level and they're like, if this stock goes above this level, then I can buy this stock. I think it's time to mention, please make sure you join our WhatsApp group and Telegram group. I should send the link, right? Let me see if I can send the link. In the meantime, send your questions in the chat section. Let me send the link. So that's the link, guys. You can join on our WhatsApp group. So please make sure you join, because I actually send a lot of educational resources there. So every day you'll be getting market updates basically, and some investment opportunities, some of the best performing stocks, basically all the information necessary for you to invest. So make sure you join. So look at your chat and you'll find a WhatsApp link to join our WhatsApp. Anyway, let's continue. So as I was saying, I think by now you guys now know the difference between a market rate, buy stop, and buy limit. So let's talk about asset take profit and set stop loss. What are these? So basically, um, you use a set take profit when you want to set a certain level where, let's say, if your trade, or I mean the price of the stock you bought reaches that level, you want to take the profit and close the trade. So let me explain in simpler terms. So we are buying Apple at the time. So Apple is currently at 174.20. So for an investor, you'd be like, okay, so I'm buying Apple right now, and let's say for Apple, I'm looking to double my returns using Apple. So I would say 174 times 2, that would be around 340, 348. So I would say 348 would be my set take profit. So if this stock reaches 348, please automatically close the trade for me so that you lock in your profits. On the other hand, what's a set stop loss? So a set stop loss is the opposite of that. So a set stop loss, you use it to limit your loss. So basically, uh, most of the guys who use a set stop loss, these are guys who are investing in highly volatile stocks that are moving with a lot of volatility. So let's say Apple right now is at 174. So you would set a stop loss of maybe at around, let's say 60 USD or even 50 USD. So if at all anything ever happens and Apple falls to that level, please automatically close my trade so that you avoid losing everything. The guys who invest maybe in companies they don't know, the small companies, yeah, and the companies that tend to be quite high, tend to have a lot of volatility. So you'll find that a company has reported that it has gone bankrupt, and then the company falls from, let's say, like even 30 USD to zero. And the company is removed from the exchange, the trading is halted, etc. And you find that a user reporting later that I can't see my, I'm seeing zero on this specific stock. What they don't know is that the specific stock has been delisted, right? So what you do to avoid such scenarios, especially if you're investing in highly volatile stocks, always make sure you use a set stop loss. So you can set a stop loss, let's say 70% below the current market price, and then you can set a take profit, maybe 100% above the current market price, right? So that's when you use the both orders. So I think now you guys know what's a buy stop, a buy limit, what's a set take profit, and what is a set stop loss. Remember, you can put all this when buying a share. So you can set everything, and then you just continue with everything you're doing without worrying, because you already have set limits. Anyway, so let's go to the buying of shares. One thing that's really amazing about Hisa, that's different from other, let's say, brokers or other platforms, is that Hisa will allow you to buy as low as 5 USD of a specific stock, what you call fractional shares. So some guys might be discouraged because Apple is currently trading at around 174 USD. 174 USD is around almost 20,000 Kenyan shillings, right? Not many people have 20,000 Kenyan shillings to buy one full share of Apple. So what you do, you'd come here, delete that amount, select the amount that you have. Let's say you have 5 USD. And then I want you guys to notice what happened on the left side. The 5 USD, when you selected 5 USD, the shares change, the value of the shares and number from one whole share to 0.03 of that share. So with 5 USD, you're able to buy a fraction of Apple. So you'll get 0.03 of that share, right? So let's type something like 10 USD. 10 USD you'll be able to get 0.06. Let's type something like 100 USD. You'll be able to get 0.57 of Apple shares, right? So you just select amount. Let's select $5, the minimum amount, and then we only charge 1% per trade. So with 1% per trade, let's select USD wallet. So you see, you're going to spend $5 to buy this share. the transaction charge is going to be 1%, which is 0.05. And you can see the total buying cost will be 5.05%, right? And you can see the market is open. So the market will be closing in the next 7 hours. So the market, the US market is currently opening from 4:30 p.m. to 11 a.m. So the market is open right now. So if I clicked buy, the order would go through immediately, right? So that's one thing to note. And I think you guys should note that's important is you don't have to worry about buying the stocks if the market is closed. If the market is closed, you can just buy a stock. So what will happen, the order will be pending and the order will be executed when the market opens. So you don't have to worry, should I know when the market opens, etc, etc, right? So always make sure that you don't have, you don't have to worry about the time. You just place your order, and then when the market opens, the order will be executed automatically. So I think by now you guys understand this, the buying page, like basically what you're seeing here. So for selling, the process is still the same. So you have the market rate, you have the stop loss, you have the take profit, and then you have the amount. So basically everything is the same. Anyway, so I think that's okay on the US stocks. So for the categories, it's the same categories as the Kenyan stocks. So growth stocks, I said these are stocks that are growing at a higher rate than the average market. Then the value stocks are stocks that are sort of considered undervalued and stocks that have value elements. And then we have the dividend stocks. We have Buffett favorite stocks because he's one of the best investors in the world. So the guys who would like to invest in the stocks that he's buying. Then you have blue chip stocks. Blue chip stocks are basically some of the largest companies in the US. Then you have the large cap stocks. I think for a beginner, this would be the best. So just come to large cap stocks and you'll be able to invest in some of the largest stocks not only in the US, but in the world. Actually, Apple is, I think, the number two largest company in the world by market capitalization. So as a beginner, you're more suited to investing in such companies because they're more stable and they have been in the market for quite long. Yeah. So these are the companies you look at, the likes of Apple, the likes of Microsoft, Google, Tesla, Johnson & Johnson, Nvidia, Procter & Gamble, Walmart, JP Morgan. So there are a lot of them. So for Apple, you can just click on Apple and then click buy and you'll be able to buy shares of Apple. So let me go back to the same thing I said about, you can also see the movers. So the thing about the US market, there are stocks that are very volatile. You can see like this specific stock called Rain has gained 13.93%, which is quite a significant gain. Then we see another stock here, 42.29%, another 27.32%. So these are quite interesting stocks. So the market, these are an interesting market to look at. Yeah. So the same thing I said, for the guys, let's say you're a person who has never invested in the US market and you don't have an idea of which shares to buy. So you just click on US stocks and then scroll down, click on most traded on Hisa, and then you'll be able to see some of the stocks that most people have been buying for that specific month. So we're in May, so most people have been buying Tesla on Hisa. So Tesla, Apple, Zim. The reason why people love Zim is because it has one of the highest dividend yield of over, I think, 100%. So that's why most people have been buying Zim. Then you have Foot Locker, then you have PowerBridge, we have Brain Therapeutics. I think the guys we've just mentioned that it has gained 13.93%. Seeing that it's a stock in the healthcare sector, I understand maybe this company, the company has discovered some medicine or some vaccine. I think that's a common move for companies that have discovered some cure for something. So you'll find them gaining even 1,000% in a day. So you can see there are guys who have bought that. Then you can see guys bought Amazon. You can see some guys have bought Nvidia. Nvidia is one of the best performing companies in the US right now, having gained over 100% year to date. Then you have a residential. The reason why people are buying this one is because it gives you monthly dividends. So every month they're giving you dividends. Then we have Meta. So I think what you can do, just after clicking on the most traded on Hisa, just note down the stocks on the most traded on Hisa, and then do some research on why people have been buying the stocks. So just do some research on Google on what's making people basically buy stocks, because investors are sort of emotional something. So whatever investors in other platforms are doing is sort of similar to what investors on his are doing. So basically, we'll find the information somewhere on the internet of why people are buying these specific stocks. Anyway, let's go back. So we've talked about US stocks. The US stock market has 13 sectors, unlike the Kenyan market, which has 11 sectors. So you can see the sectors, the likes of communications, consumer cyclical, consumer defensive, energy, financial. I think all the sectors here are self-explanatory except two. So let me explain these ones. So that's the consumer cyclical and consumer defensive. So the consumer cyclical sector, this sector has stocks of companies that you buy but you don't need. So basically, these are companies where if the economy is bad, they'll not perform well, because guys will be like, okay, we can stop spending, buying the products of this company until our situation becomes better. So it's mostly the likes of, let's say, a company like Nike, the expensive cars, etc, etc. So that's why they're called consumer cyclical um, uh, stocks, or another name for, you find other places written consumer discretionary. So they both mean the same thing. So consumer cyclical and consumer discretionary. On the other hand, the consumer defensive sector is the opposite of that. So consumer defensive sector, this would be stocks, companies that no matter what's happening, you still have to use their products, right? These are the consumer defensive sector. So these would be companies in the food industry. So no matter what's happening, people still have to eat. That's why they're called consumer defensive stocks. Another name for consumer defensive would be consumer staples. So if you find a place written consumer staples, it's still the same thing as consumer defensive. So the reason why these stocks are grouped in sectors is to be able to narrow down the stocks into specific categories. So you'll find that there are some sectors that tend to perform well during specific times. So it will be important to know this sector performs well during this specific time. Like let me give you a quick example. At a time when the market is experiencing a lot of growth, the interest rates are low, you'll find that the technology sector tends to perform very well during such a time. But at a time when the market is going through a hard period like last year, you'll find that maybe there's high inflation, the interest rates are high. You'll find that during that time, the energy sector will perform well, and also the consumer defensive sector. So it's also important to note the sectors and to note the specific qualities of these specific sectors, right? So let's go back to the US ETFs. So let me just do a quick explanation of what an ETF is. So an ETF is basically a basket of stocks. You see the way most guys when buying shares, they buy shares of individual companies. Let's say we'll buy the shares of Apple, we'll buy the shares of Safaricom separately, we'll buy the shares of KPLC separately. So what ETFs do is that they take all like 100 or even 50 shares, 50 companies, 100 companies, or even 1,000 companies, and they put them into a fund. And now you buy the shares of that one fund, like the way you would have bought a single company. So ETF, the word ETF stands for an exchange traded fund. So an ETF is basically a basket of stocks, commodities, any other assets, right? So I think by now you guys would know why ETFs, people love ETFs. This is because they have the diversification effect. Basically, if you're a beginner especially, you don't know which stock to buy. You don't know if it's Tesla, if it's Apple, but you can buy a fund that has all the stocks. So you don't have to do all the work of selecting. Okay, so when it comes to ETFs, if you already know what you're looking for, you'll just click on all ETFs, and then you'll search the ETF either by ticker symbol or by the name. So one of the common ETFs is called the VOO. So that's the Vanguard 500 ETF. So I'll just type VOO, and then I can get VOO. Then you'll be able to buy VOO just like you would have bought any share. So, but for beginners, I would advise, especially for beginners, you're better off investing in index funds. So what are index funds? Index funds, these are basically ETFs that are tracking a specific index. And just as you guys were able to see in the Kenyan market, we have three major indices. So you have the NSE 20, you have the NSE 25, and then we have the all market index. I mean, so in the US market, it's still the same. We have various indices that track specific categories of the market. The common one is called the S&P 500 index. So the S&P 500 index tracks the 500 largest companies in the US. So this is the index that's used as the benchmark for how the US market is performing in general. So there's a way you can invest as a beginner. Let's say you don't know any company in the US, you don't know which stocks to buy. The first place to start would be in the index funds. So all these index funds you're seeing here, they track specific indices. So the common one is the SPY and the VOO. And this is because they track that benchmark index that I've told you. So you just click on VOO. And then when you click on VOO, when you buy the shares of the VOO, you're buying the shares of 500 of the largest companies in the US. And I think one thing I should mention, historically, the VOO has had an average return of around 10%, 9 to 10% historically. And then for the past 10 years, the Vanguard 500 ETF has had an average return of 13.69%, which is quite good in the past 10 years, average annual return of 13%, which is almost the same as the returns of the local bonds, the local IFBs. So I think that's a good investment. This is as passive as it gets. So if you're an investor who doesn't like, let's say, a lot of stress, you don't know how to pick stocks, this would be the best ETF to start with, basically, because it's allowing you to invest in basically like the entire market, right? So let me show you something. I think a visual thing I would love you guys to see. So you can see when you look at the history of that ETF, the ETF has been going up, even though we have some moments where we get a few pullbacks. Over the long term, the ETF has been going up. So it's an easy way to grow your money, especially for passive investors. You'll see the same. Another ETF you'd look at is this ETF, the Triple Q. So the Triple Q tracks the NASDAQ. So the NASDAQ is another index in the US stock market with 100 companies in the US. Mostly 56% of the NASDAQ is in the technology sector. So the reason why some guys love the Triple Q ETF is because it's more volatile than the S&P, because it invests in the technology sector and it has higher returns. Actually, historically, it has given an annual average return of around 16 to 17%. That's why people love the NASDAQ. So for stability, you'd go for the Vanguard. For growth, you'd go for the Triple Q, the Invesco Triple Q Trust. Anyway, that's it on the index funds. Anyway, you can, for the ETFs, you have ETFs that pay dividends monthly. You have ETFs that pay dividends quarterly. So you just click on dividend ETFs and be able to see some dividend ETFs, the like of SCHD, the likes of SPYD. So you can see various ETFs. And that's why I've insisted you join our groups, because I always send basically an ETF daily to watch. So you'll be able to find some articles on that. So all the other ETFs, Bitcoin ETFs, etc. And then you can also search the ETFs by issuers. So we have BlackRock, State Street, Vanguard, Invesco, ProShares, Charles Schwab, ARK, many issuers. So all these ETFs, they are issued by specific funds. So let's say BlackRock. If you click on BlackRock, you'll be able to see all the ETFs that BlackRock issues. So mostly the iShares ETFs, right? When you click on Vanguard, you'll be able to see all the ETFs issued by Vanguard, the likes of VTI, VTV, DND, etc. So there are many. At one time, you guys can do your own research. Finally, let me click on, let's go back. Let's talk about CDSC. So what's CDSC? Okay, initially, in the Kenyan market, for people to own shares, you needed to have a physical certificate. So when you bought shares, you'd be given a physical certificate. But around 2004, an act of parliament was enacted to basically convert the physical certificates into sort of what I would call soft shares, or basically a soft copy version, basically. And then the Central Depository and Settlement Corporation was established to become a sort of a depository for shares. So instead of having physical certificates for shares, the CDSC would be the place where the shares are stored in an electronic format, and then you just have what you call a CDS account, and then just like the way you have a bank account, the CDS account would be the special identifier number for ownership of Kenyan shares. That's why you have the CDSC button. So the CDSC button, for those who are investing in Kenyan shares, you need a CDS number. For those who are investing in US stocks, you don't need a CDS number. As far as you have opened your account on Hisa, gotten verified, and for verification on Hisa, you just send us your front page and back page of images of your ID to get verified. So for Kenyan stocks, you need a CDS number. So if you already have a CDS number from another broker, you'll just click on CDSC, and then you'll click on connect. That's for someone who has a CDSC number. If you don't have, you'll be able to see the option to open a new CDS account, right? So for those who have, connect your CDS account, and then you'll see the option to open a trading account. For those who don't have, click on CDSC, open a new account, and we'll be able to open a new CDS account for you. And then another question guys ask is, can I have more than 2 brokers? Yes, you can have more than 2 brokers. So if you are using another broker before, you can just connect your account here and then open a trading account, and then you'll be able to buy new shares using our platform, right? So that's it for the CDS button. The only thing that doesn't change is your CDS number. So you can have even 3 brokers, but your CDS number will remain the same across the platforms, right? So we'll talk about CDSC. Let's say you have a problem on Hisa and you want to contact customer care. What would you do? So you'll click on this segment here, this button, the customer care segment. Click on that segment, and you'll be able to contact some of our team members who can be able to help you, right? So you can just send a message, click on message, and you'll be able to help you out. So you can just send a message to us. If you need to send us screenshots of the issue you're facing, you'll just attach your image. So you can do that, or you can, if it's something that you can do by yourself, so you can read some of the articles available, right? So you can click on help, and you'll be able to see some of the articles available basically to help you. So let's say for the guys who ask, I don't know how to invest. I don't even have an idea of where to start. Do you guys have resources for me to learn how to invest? Yes. So after clicking on the customer care button, remember where we click, guys. Instead of going to send us a message, you'll not send us a message. You'll just click on help. When you click on help, you'll see a collection of articles. Click on investment guide. When you click on investment guides, you'll be able to see over 100 of articles basically teaching you how to invest. A lot of articles. So you can see all the articles here. So you can click on any article and you'll be able to start learning how to invest. So actually, so I've just talked about US ETFs. So if you didn't understand anything about US ETFs, just come here, click on this article on investing in US ETFs on Hisa, and you'll be able to get a full article on investing in US ETFs on Hisa. So the article has what is an ETF, what are the types of ETFs, why should you invest in ETFs, etc, etc. So there are a lot of articles, and then you have even resources about the Kenyan market. So you'll be able to see best performing stocks in the NSE. So like click here. When you click here, you can see, click here, NSE top performers. You'll be able to see right now, the top performing company is Umeme, which has gained 89.35% year to date. So you can even be able to see the best performing companies, right? You can also see the dividend yields of various Kenyan stocks. Let's say you are investing in the Kenyan market, you don't know when companies are going to be paying dividends. Just click on this article, KE stocks upcoming dividend dates, and then you'll be able to see the dividend dates of upcoming stocks. So you can see like KCB, their book closure was on 6th of April, and they'll be paying their dividends on, I think, Friday, 25th of May. So you'll be able to get all these resources. So I think you guys can follow along. So many articles, you will read them at your own time. So let's go to the last part, which is wallets. So for news, basically self-explanatory. So you'll be able to see some of the news that are happening in the markets, basically that would influence maybe how you invest, basically some just to get you updated. So we have news, we have personal finance articles, we have articles on the market, etc, etc. Anyway, so let's go to wallets. So we have three types of wallets. So we have the FIB wallet, then we have the default wallet, and then we have the USD wallet. One thing I forgot to mention. So for Kenyan stocks, we partnered with a local brokerage company called, or a local investment bank called Faida Investment Bank. So that's what FIB means. And so for FIB, our partnership with the FIB allows us to offer you guys Kenyan stock. On the other hand, we partnered with Drive Wealth, which allows us to offer US stocks. So that's why we have an FIB wallet. So the FIB wallet, this is where you deposit money that you want to buy with Kenyan stocks. So remember, for the FIB wallet, only deposit money in the FIB wallet, the money that you want to buy, to use to buy Kenyan stocks, right? On the other hand, the default wallet, this is where you deposit money before deciding what to do with it. Basically, the default wallet, right? And then you have the USD wallet. This is where you deposit money for you to invest in USD stocks, US stocks, right? So remember, I think the most important one is the FIB wallet. That's where people confuse a lot. For you to buy Kenyan stocks, you need to have money in your FIB wallet. So always have money in your FIB wallet for Kenyan stocks. And the other things are self-explanatory. So we have deposit. For deposit, you can deposit via, so you can choose to deposit for, let's say, Kenyan stocks, and then you can choose the amount, and then you can choose what you want to, let's say, select like 100 bob, then proceed. And then you'll choose either mobile money or bank transfer. So for mobile money, you'll be able to use M-Pesa. You can use M-Pesa. For bank transfer, you use your bank. And then after you use bank, you can send us the receipts for confirmation, and then you'll be able to credit your money. For mobile money, the deposit is instant. So I think for withdrawal, it's the same process. Select from which wallet do you want to withdraw, the amount, and then where do you want the money to go, and then proceed. So for save, this is something that we are working on, will be coming soon. You'll be able to save on the app. And then for transfer, this is also in the works. So I think that's it for now, unless you guys have any questions. Raise your hand if you have any questions. Yeah?
We have a few questions on YouTube. One question is from Derek, who is asking, are profits charged capital gains tax automatically?
So that's a good question. We don't have capital gains tax. The only tax that you're charged is what we call the tax. The only tax that you get is the tax on your dividends. So for the Kenyan market, the dividends are charged a 5% tax. For the US market, just because we are non-US citizens, basically this is a rule in the US that you are charged a 30% tax on dividends for non-US citizens. So basically for the Kenyan market, 5% tax on dividends. For the US market, 30% tax on dividends. You're not charged anything on capital gains. So basically, those are the only charges on our platform. 1% when trading, and then the 30% charge at source on dividends. So you'll find the dividends have already been charged by the time you receive them.
Okay, we also have another question. The question is it possible to short sell assets on Hisa? Is it possible?
Yes, okay. It's possible. It's possible to short sell, but actually it's not like, I don't like calling it short selling, but it's a way of short selling. So we don't offer like that specific functionality on our app. But what you can do, we have a category of ETFs that we call inverse ETFs. I think for the guys who have been attending our lessons, I've been teaching a lot about this. Actually, let me type on the chat section, inverse ETFs. So inverse ETFs are basically a category of stocks that allow you to bet against the market, or basically to make money when the market is falling. And how an inverse ETF works is that the inverse ETF will use products such as derivatives and debt instruments to bet against the market, basically. So let me do it live. So let me see if I can get an inverse ETF of the S&P 500. So all ETFs, let me type one short. So we have the likes of, let me see if I can get one. Okay, let me see. Yeah, so this is one example of an inverse ETF. So I think I mentioned about the NASDAQ. Let's say you're betting against the NASDAQ. Let's say you're investing in the NASDAQ. So if you believe the NASDAQ is going up, that's when you'd invest in the NASDAQ. So you'd invest in the NASDAQ using the triple Q. That's the invest called triple Q ETF. So on the other hand, let's say you believe the NASDAQ is going to go down. A year like last year, the last year was a bad year for the tech sector. And then I've told you guys the NASDAQ is very tech heavy. Yeah. So it's a tech heavy, it's a tech heavy index, right? So what you do, you'd use an ETF called the ProShares Ultra Pro Triple Q ETF to short the NASDAQ. So basically, whenever the NASDAQ is falling, the S Triple Q will be going up. So I think one thing I want to tell you guys, be careful with the inverse ETFs. Only use the inverse ETFs if you have information about the market, you're well informed, you've done your research, and you have a reason why you think the market will go down. So basically, you'll only use inverse ETFs if you're betting against the market. So you can just do your research on the inverse ETFs. I wanted to give you guys one example. This is the ProShares Ultra Pro Short. So basically, in the market, shorting means like betting against the market. So we don't have short selling, but you can use inverse ETFs to bet against the market. Sasa, yeah. Any other question?
We do not have any other question. That's it from my end.
Sasa, thank you guys for joining the webinar. Make sure you join our WhatsApp group. I've sent the link on the chat section. So for the guys who have a question, maybe the types of the ETFs, if you want to learn about inverse ETFs, we have all those articles on the place I've showed you. When you click on investment guide, you'll be able to access all those articles. You'll be able to learn about inverse ETFs, leverage ETFs. We have a lot of resources. So anyway, that's it from me, guys. Have an amazing time, and yeah, see you on Thursday. So on Thursday, we'll be talking about how to pick good stocks to buy. So I'll teach you guys how to do that on Thursday. So make sure you sign up for that webinar. You'll find the link on our groups. So have an amazing time, and yeah, see you on Thursday.
Okay, thank you for joining us tonight. Have a great evening and night, everyone. Bye.
So bye, guys.